Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on CMG SKX NKE and TWTR. So CMG bears taking back over. Increase in bear volume. Close at the low of the day favors the bears. And we've got a tightening range between the 200-day moving average resistance and the 100-day moving average support. After rejections from this resistance, a bounce off support, we can see this channel tightening a bit, looking at 477 and 411.77 as the current range. So the bears are in control. We can scout a bullish entry. I would be using 399.03, the low of that pullback, as a potential bottom fishing level, which means if you make an entry, let's say just above 400, you would exit if 399 support were to break, because that would be a lower low and indicate that the bears do have some strength. Weekly time frame, indecision doji, but we did backtest and hold that middle Bollinger Band. And the question is going to be, can the bulls turn 420 into support, get this 50-week moving average as support, and break this lower high pattern, shifting the longer term trend to favoring the bulls? They're on the verge of it. They just need that little push through in a strong bull week. But we have to have that 200-day moving average as support to do so. SKX is now backtesting the middle Bollinger Band, 24.99, and we did reject from it by a couple of pennies. So it held as support, we lost it, and now it's backtesting as resistance. And we're looking at the 50-day moving average support of 24.39. So we have a tightening range at this point where we have our high, the low of the consolidation, our lower high, and now a higher low. So the range I'm watching is 24.39 support and 25.86 resistance. Weekly time frame shows that tightening range with our high of the bounce attempt and now our higher low. Bulls still maintaining exponential support on the weekly time frame. If we pull back down and break 24.39, we will be looking for nice further downside and continuation for the bears. NKE, bulls are clearly defending the 52.80s. We have support at 52.86, 89, and 90 the past 3 days. So the bears need to see a clear break of that level for continuation to the downside. We have clear resistance as well up at the $54 psychological level. So that's the current channel that we are watching, about $1.10 range. And the bears want to see a break of this higher low pattern with a break, ideally, of 52.16. So again, going to be interesting here for NKE. We have multiple inside candlesticks in a row on the weekly time frame, same as the S&P 500, and watching for a clear break from that range on the daily time frame. And the overall trend does favor the bears on the weekly time frame, but the daily trend, shorter term, the past 2 months, favors the bulls. So it's going to be very interesting, definitely keeping NKE on watch, because once this trend breaks, it will be a really nice bear play, or if the bulls break $54, we could see another $1 or $2 to the upside. Twitter, bears in full control. We filled this little gap here at 16.45 to the downside, and now we're just looking at 16.16 support, the low that we saw in this pullback. We had our dump. Now our lower high was set at 17.78, rejecting from the 200-day moving average resistance 4 times. And now the bulls need to form a higher low compared to 16.16. Otherwise, the bears are going to run away with it. You see on the weekly time frame, lots of weakness. This looks a lot like a bear flag, which is the dump. Little bounce, cooling off technicals, rejecting from resistance, and then heading back to the downside. And this bear flag would be confirmed if we break 1616 support. Then we would be looking down at 1568 as the next support level. So Twitter bears in full control on the daily and weekly time frame. 1616 will be key support to keep an eye on next week. So CMG and NKE are getting really interesting as a battle between the trends on the daily and weekly time frame. Weekly time frame for both overall very clearly a bear trend, but the daily time frame has seen strength for the past month or two in both names. So certainly going to be watching them for some clear direction. I appreciate you watching. We'll check back in on Monday as always. Have a wonderful weekend.